Hello and welcome, my friends, to another episode of the Capital Allocation channel. So this is where the money is made, my friends. This is it right here. And it is really sad to see that the Fed is really in full control of this market. The fundamentals are irrelevant, at least in the short term, and the Fed is able to manipulate this market with simply the mention of raising rates. So sad to see, but all we can do is take advantage of this market, the opportunity, and the fear that is giving us this opportunity, my friends. So check this out. S&P 500 daily chart I mentioned, we had a nice head and shoulders here. We had that left shoulder, head, that right shoulder, retested the neckline, came up, and a clean break back below the neckline. Generally, I would say we're for sure going lower with some TA like this, but the easy money will continue to flow. If they do actually tighten, presumably the response will be similar to before. They're going to shake people out, get people scared, having them beg for more easy money. And then we're going to see numbers that we're already in the trillions, so what's next? So I'm not worried about this. In fact, I'm really happy. I like to see the market drop, and I like to see rational behavior coming back into play. Personally, I don't own these overvalued tech stocks, that type of thing. I own commodities, industrials, metals, mining, gold, you name it, and also everyday household items that people need regardless. So I also try to stay hedged. Right now I'm short the overall market and long individual stocks. So not investment advice, that is what I'm personally doing in the market here. So the 10-year yield has been rising in a controlled manner. If you look at Gregory Mannarino's work, he's been very, very accurate in this market. He's suggesting we're going to settle here above 3%. I think he could very well be right. We may end up going a little higher, but the CPI is 7-8%, real inflation 15% or higher. So I mean, what I think is going on here is they're trying to get this rates up by causing high inflation, allowing the rates to normalize to a little bit higher rate while still being negative in real terms. So kind of a mind game here. Put call ratio 1.3, so a lot of fear coming into the market. I think this is going to also create a wall on the downside, attempting not to trigger all of these puts in the market. But personally, rather than selling and running for the hills, which I know a lot of people do, this is just a few percent down that we've seen in the last couple days. But staying hedged with puts doesn't seem like the worst idea. Look at this VIX. This is awesome here. Just a huge bullish engulfing candle, completely reversing off this low near 20. So we will see where this goes from here. Chinese market still down. I'm reassessing my thoughts on this Chinese market. I was for the longest time thinking, okay, these stocks are cheap. China is basically becoming the most powerful country in the world. But with this new round of lockdowns, it seems, and also with what happened with Russia, the fact that they can simply just, I have stocks in Russian companies. I can't buy, sell, can't do anything. So Could this happen in the future with China? I don't know. But definitely I'm a little more concerned about the Chinese market than I previously was. Hey, maybe that's an opportunity for someone, but personally I'm kind of over it. I think what they're doing is pretty insane, so staying away from that. But let me know your comments below. I would like to hear what you guys think about this Chinese market here. Brazilian market. Brazil has been doing very good. And Brazil has some of the cheapest stocks with the highest dividends as far as book value, even below book value. Some of these companies, huge dividends, sometimes 15% dividends. Some decent companies here. I personally see this as an opportunity. If you look at this Ichimoku Cloud, suggests we could be about to roll over and maybe retest this previous area. But again, I see this as an opportunity because of the valuations in the Brazilian market, and I think there's less risk, less political risk in a country like Brazil, at least from a U.S. perspective. So Japan has been doing very poorly lately, at least as far as equities go. I do think there are some decent valuations in certain companies in Japan, and I am investing in those individual companies, but as far as the market goes, this thing has not been doing well. Their currency has been devaluing quickly, basically as the Bank of Japan is saying that they are keeping their rates locked. They will buy as many bonds as they need. But they've been doing this forever and they've been managing it. So is this an overreaction? Maybe. Will this help their companies export more? Definitely. And I think that is probably the idea, to have some devaluation to make their exports more attractive. And I'm all for that. I like to buy Japanese products, well-made products, and the cheaper they are, hey, I'm happy with that. But I also think, again, there's opportunities in the equities market, although maybe not the overall market at this time. All right, now let's get into these cryptos. So Bitcoin under some pressure. Looks like we're retesting this previous trend line. In a overall market environment like this, with equities falling, rates rising, Bitcoin looks a little bit rough, although the patterns I've seen look like essentially whale manipulation. I think they don't want it to drop too low below this trend line because that kind of ruins their game. They're not able to suck more people into the market. So every time we've approached this trend line, we have, these huge bullish candles back here. Here's a massive candle, pretty good sized candles here. Some buying pressure here. So will they be able to manipulate this towards the upside and try to trap more people in here? Probably. I would say that's a decent probability here. If we get too much below this trend line, though, that's going to look pretty rough. What I like to look at here, and I mentioned before, these Bitcoin shorts, if we got above this previous high, we would probably see some pressure in Bitcoin. That's what we're seeing. It's pretty easy when you look at these shorts here to figure out what's going to happen with the underlying asset. Monero, the champion of the week here. This is personally my largest crypto holding. I love Monero. And if you've been in Monero, you've been outperforming pretty much everything. So that's really cool to see. Yeah, and also just from a societal perspective, it is pretty positive when I'm seeing this type of issue here. So where will we go next? Like I said, we're outperforming. That's a pretty good sign. Probably retest the top of this trend line. It's hard to say which way this thing will break, but the recent outperformance suggests, we may have some pullback, some retest, some shakeout, but it looks good for the long term for sure. Pirate Chain, a little different story. A little bit of pressure. Looks like the momentum is slowing from the downside, although it's really hard to say when you have choppy patterns like this. So essentially, I think we're retesting this area here between maybe $1.56 down to $1.10-$1.15 here. Where there's been significant support and resistance levels. Hopefully this thing will turn around in this cloud. These clouds tend to be areas of support or resistance depending on where you're going, and we do see the momentum slowing into this cloud. So I would like to see a retest towards the upside, but in general, I think this is showing that people have more confidence in Monero, at least overall. So, I'm not going to be a judge here, but that's just what the charts are telling me at the moment. Dero has been doing very well lately. I have kind of a head and shoulders pattern back here. Broke above that neckline. Here we're basically in a range between maybe a little under 10 and a little under 16. So this is pretty choppy, at least from a trading perspective. But the fact that Dero broke to the upside is pretty interesting for the long term as far as Dero is concerned. So again, pretty choppy pattern. Hard to tell which way is this going to break. Pretty much range bound. But that break towards that upside, again, suggesting longer term potential for Dero. So again, from a societal perspective, I really like to see this type of move here. Haven, again, this long-term trend, man, super long-term trend, just bouncing off that trend line. Hard to say. We're slowing momentum on the downside. So will this thing try another run? Again, I could see this breaking either way, so I'm going to hold my comments on Haven, but tell me what you think. I haven't been following the fundamentals, so is there anything going on with Haven that I don't know about? Let me know in the comments below. So that is it for the cryptos. On to some metals and commodities here. Gold breaking to the downside, obviously, with at least nominal interest rates rising. That's not surprising. It is still holding pretty decently here, though. Again, there's a quote. I don't know who it's by, but basically it states that you don't buy gold to get rich, you buy gold to stay rich. And a lot of people consider it somewhat of an insurance policy rather than a way to make money, and that's kind of the way I think about it, especially with an environment of Klaus's cyber pandemic and all of this type of nonsense. I sleep better at night, at least personally, holding some metals in my portfolio. Always physical. I don't mess with you could trade around your core positions with ETFs. Like obviously, if rates are rising, you have a core position. Obviously, not investment advice, but you could short the paper product when you see large moves coming. I mean, that's something I've considered in the past. Dow to gold. Interesting chart here. So just to show you the power of the Ichimoku Cloud, uh, basically if you were trading around this pair here, you'd be getting in here, you'd have this green cloud all the way up. You would have sold here, shorted it maybe, either sold or gone short all the way down here, got in again. Basically I guess you'd be selling right here. But anyway, you get the idea. Some of these longer term trends, this is a great technical indicator for trading, like swing trading basically, and investing. So I really like this. But as far as Dow Jones to gold, heading down, so gold is therefore outperforming, not surprising. I could see that continuing, at least in the short to medium term. Silver, some downside here. I like to see this. For me, this is a buying opportunity. Love to see silver getting hit like this. So what can I say? Fundamentally, I think the fundamentals couldn't be stronger for the industrial and investment aspects of silver. And looking at the gold-silver ratio, this is an interesting chart here. So if you look at the gold-silver ratio, it has topped out previously right around the level we are here. So back in 03, topped out at about around 80, similar to where we're at now. A little bit higher, around 83 back in 08. Again in 16, topping out right around 80 something. Went super crazy. I mean, I'd say this was, well, you know the circumstances, but I don't know if this necessarily counts. Pretty crazy times here, but again, gold silver ratio here getting near these previous peaks. So personally, I would go heavier silver here, just looking at historical valuations, but that is just me. So WTI had a pretty good call on this, suggesting we were going to get this basically pennant triangle pattern. But here, a lot of these patterns, they break out one way or the other. Around 80 to 90% of their kind of terminal destination here. Which way this will break? Probably up to political events. If these lockdowns in China continue, this could break to the downside. If we see reopening, something like that, increasing demand, could see break to the upside for sure long term. If there's not more investment and allowed into developing these assets, we're headed for an eventual energy crisis. So long term, I see this heading towards the upside, but we will see, at least in the short term, which way is this thing going to break. Copper here, breaking to the downside. Dr. Copper, giving you a general idea. Basically, copper can be used as a substitute for kind of overall economic activity. So this thing's had quite a run up, so this move is really insignificant. I don't think this is very meaningful. but we are breaking to the downside, so just another piece of the puzzle. But we are developing kind of a cup and handle pattern, so we'll see if that plays out. This could just be a smaller move and an overall kind of handle here before breaking to the upside. I could definitely see that scenario playing out. Personally, I own a lot of miners, copper, so I am in that for the long term. And a future video, I'll go into more detail about specific equities that I am invested in this space. So to close out, everyone, if you're still with me, I appreciate everyone watching. And I like to study very successful investors. One of them is Seth Klarman, and here is a quote from Seth Klarman: "The single greatest edge an investor can have is a long-term orientation." And when things seem crazy in the short term, I try to think 10, 20, 30 years out. Where are things going to be? Which companies are going to be dominant? How much devaluation of currency is going to happen in this 30-year period? Where is real estate going to be? And that helps ground me personally, so I don't overreact to the short-term moves. And again, maybe that strategy would be useful as part of a kind of a mindset tool that you can use as an investor. It can be very stressful when your money is on the line, but for me, this is very helpful. So again, thanks for watching, everyone. If you found this helpful, please give a like, share, subscribe. I really appreciate it. Take care, and I will see you in the next one.